While markets remain understandably concerned about the sabre rattling and elevated tensions between Washington and Pyongyang, there's not a lot investors can do about that, apart from cross their fingers and hope that common sense breaks out. What investors can do, however, is remain focused on economic and company fundamentals, and there's quite a bit to think about coming up in the week ahead. On the macro side, the highlights will include the latest UK government borrowing figures on Monday the 21st, the second estimate for Britain's second quarter GDP growth on Thursday the 24th. Remember, the first pass was for quarter-on-quarter growth of 0.3%, equivalent to a year-on-year increase of 1.7%. The chart here shows the year-on-year comp, and it's pretty clear that growth is, well, sluggish at best. And finally, on the macro side, the annual Central Banker Symposium in Jackson Hole, Wyoming takes place on Thursday the 24th to Saturday the 26th, though I do appreciate that some of you would probably rather jump in a hole than listen to yet more policy speak. Bottom up, 4 FTSE 100 firms and a good number of FTSE 250 stocks are due to report interim results or release trading statements. They include retailer WH Smith on Monday the 21st of August, copper miner Antofagasta and house builder Persimmon on the 22nd, media giant WPP and stricken support services stock Carillion on Wednesday the 23rd, and transport specialist Stagecoach on the 25th. But the stock perhaps most capable of causing a fuss in the week ahead is mining and petroleum group BHP Billiton when it releases its full year results on Tuesday the 22nd of August. As we can see here, the shares have done pretty well over the past year, helped by rising commodity prices, including a recovery in oil and also the weaker pound, which has increased the value of BHP's global operational assets and earnings when they're translated back into sterling. July's production update was a bit mixed though, although it was at least no worse than expected. For the year, output of petroleum, copper and metallurgical coal was down, with only thermal coal and iron ore showing an increase, as this graphic shows. That said, output was hardly helped by a strike at the Escondida copper mine in Chile and the impact of Cyclone Debbie on the firm's coal assets in Australia. Chief Executive Andrew Mackenzie has already forecast a strong rebound in copper output for the year to June 2018. So, the first thing to look out for in the numbers will be output guidance for those key raw materials: petroleum, copper, iron ore and coal. Also look out for updates on BHP Billiton's key growth projects, which are the Mad Dog Phase 2 oil expansion in the Gulf of Mexico, the Spence copper mine in Chile, South Australia's Olympic Dam copper mine, and the Canadian Jansen potash and fertiliser resource. As for the numbers, well, they're likely to be a bit messy. BHP has already flagged the second half will feature a $546 million pre-tax exceptional charge to cover the Chilean copper strike, while you also need to keep an eye open for any update on the San Marco Dam failure in Brazil, and whether the miner will need to set aside any further cash to satisfy the authorities there and also meet the needs of the luckless people affected. Remember that last year BHP made a stated net loss of $6.4 billion, although on an adjusted basis the figure was a profit of $1.2 billion. The headline earnings per share loss was $1.20, although the adjusted figure was a profit of 23 cents. And this graphic here shows how stated EPS and adjusted EPS have compared over the past decade. Which one you prefer to use? Well, that's up to you. Note, however, that the company made more in the first half of this year than it did in the whole of last, so the full year figure should show a big improvement. Other numbers to watch include capital expenditure, which was budgeted to come in at around $5.6 billion, down from $6.4, net debt, which was $20.1 billion at the end of the first half, and the dividend. BHP paid 40 US cents a share in the first half, up from 30 in the whole of the year before. The trend over the past decade is shown in this final graphic. Now that's not to say everyone's happy with BHP Billiton's efforts. The 1-year price chart looks pretty good, but this is the 10-year one. The American activist investor Elliott has outlined a plan which it says will boost shareholder returns, including the scrapping of the dual UK and Australian listing structure, demerging the American petroleum onshore operations and launching a share buyback. BHP's management has rejected the proposals, so let's see if there are any further developments in that particular battle of wills. Thank you for watching, and I look forward to seeing you next time.